Here. What's going on, team? What's going on, team? Test, test, test. We good? Perfect. Gonna give everybody till 7:06 and then we'll get started. My bad. Oh, 7:06? Yeah, we still got. Oh, it's already 7:07. Damn. Nobody in the chat? Alright. Everybody ready? In the chat, we have a little bit of explaining to do with specifically two pairs, which was AU and I believe gold was the other pair, if I'm not mistaken. Right, we drew some examples out yesterday. I'm ready. I'm ready. I drew out some examples yesterday, right, which was on the AU pair and on the gold pair. Right, these are not pairs, or these are not trades that we took. These were just examples. So we could go over these examples for tonight's session, right? This is something that we talked about in yesterday's session. If you guys missed it, make sure you guys go watch it. You know, specifically the first 45 minutes to the hour of the session. That's when I would recommend you guys to watch. So we did that with a few pairs. Yesterday's session was a lengthy one. So today's not gonna be like that, right? Today we're gonna just do the basic of the basics. I gave you guys a whole bunch of information yesterday. I gave you guys $1 million worth of information for free in a 2-hour session. No higher time frame, point of interest was already 50-50 to begin with. No 4-hour 200 EMA or daily 200, so it makes sense. You're talking about for this trade? Or you're talking about the EU trade? We'll go over that EU trade too. Don't worry about it. Yeah, for you. Okay, yeah, yeah. We'll go over it. Don't worry about it. I got you. Just want to give everybody a minute. Yesterday's session was good. We had everybody in here. Looks like it's just me and you, Kendall. Me and you and I. Everybody, one more minute, and then we'll go on from there. Again, it's gonna be a pretty quick session. Not gonna be as it's not gonna be as long as yesterday's for sure. We'll get through these pretty quick today. Yeah, what's goody, Jessica? Welcome, welcome. Man, it is cold. That's a shit with Florida, man. That's why we be getting sick. Yesterday was hot as fuck. All of a sudden today I woke up, went outside, and where the fuck did this cold come from? And now it's 62 degrees outside. And I'm hungry too, man. I gotta go get some food. That's another reason why I wanna kind of finish this class already so I could go get some food. I don't know what I want though, that's a problem. Alright, everybody ready again? For the people watching the recording, if you guys have any questions, feel free to reach out to me, right? Whether it's on Discord or any social media platform or even on the comment section if you watch it on YouTube. Um, Let me know the timestamp, right? The regular stuff. If you guys have any questions, any specific pairs you guys want me to go over in the chat, let me know. If not, we're just going to be going over the pairs you see on the right hand side with the red flag next to their name, starting off with AUD USD, finishing off with US oil. So let's get started from the top. We'll go through this with every single pair again just so you guys can see the train of thought that I go into when I trade, right? And I like doing these sessions quick too, right? Because it gives you guys an insight of how I look at my charts and how quick I process what it is that I'm seeing, right? So it's to give you guys that little clarity, like you will get to this point. There is going to be a time where when you're looking at your charts, it's not as overwhelming as it is now, especially if you're a starting trader. But again, I also want to make sure that you guys understand everything, make sure that I say everything that I need to say, so it could start looking more clear for you guys. And if you guys have any questions, if I'm going too fast, if you guys need me to slow down, if you guys need me to explain something again, let me know. I'll go back, I'll explain it again, I'll take the time to explain it the exact same way we did yesterday. Right? Yesterday was a fun ass stream. We had all the questions were answered. I gave all the tips and tricks. Yesterday's stream was fun. Right? So again, I don't mind doing long sessions. I don't mind answering questions. So feel free. So AUD USD, we are in level 3 on a downtrend. Same thing, right? Lower low. We know we're at a lower high point. The lower high point, we're waiting for the confirmations to continue the trend. Price didn't continue the trend. Cool. It gave us another inducement of the low, and now it's continuing the uptrend. So I already know right now, perfect AUD USD is moving counter trend. Me personally, I don't trade counter trend, so I already know right? Again, the mindset. I'm looking at what? Let's count them out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I'm looking at 16 pairs. For a lot of people, looking at 16 pairs, they will be overwhelmed. This is the reason you go on Twitter, on Instagram, and wherever, TikTok, fucking Twitch, whatever other platform you consume content, trading content from. Everybody's gonna tell you the same thing. Oh, only look at one pair. You're gonna go crazy if you look at 10 pairs. Yes. If you don't know what you're looking for and trading is overwhelming for you still, absolutely. Look at one pair. Look at two pairs. Look at three pairs. But once you understand this on a grand scale, the grand scheme of things, and you understand exactly where you're at, you understand exactly what could happen and when, trading is not overwhelming anymore, right? I'm not married to one pair. I'm not looking to look at AU and catch every move going up and down. No, that's overwhelming. And again, we'll talk about that, and we'll get into details with that one too when it comes to Euro USD. So I'll leave those examples for EU, right? Once you understand the possibilities and the probabilities of the moves that could happen, which we will explain for this trade on AUD specifically because we had an example last night, and on gold, once you understand what could happen when and where, you already know when to stay out of the game and when to come back and play. And if something, for example, I'm looking at 16 pairs, I already know AUD USD is not a pair I'm going to be trading. I turn it off. Now I have 15 pairs left to look at. And I go to the next one and I look for the same thing. And if that pair doesn't look good, that's turned off. I have 14 left. And I do the same thing. 13 left, 12 left, 11 left, 10 left. Cool, perfect. That 10th pair, it looks good to trade. We keep that one on. Okay, cool. So we at least now know for tomorrow's trading session in the morning, I have one pair that I have to look at. Go on to the next one. Go on to the next one. The next one looks good. Perfect. We keep that one on. We move that one for the ones that we have to watch for tomorrow. Now tomorrow I have to look at two pairs. And then we look for the next one and the next one and the next one. If none of the other ones look good to trade, then perfect. I turn that off. And now in the morning when I'm ready to trade, I know, okay, cool. Now I know that I only have to look at two pairs when I'm ready to enter a trade. This is why the isolation session is so important. This is why updating your charts and having your set schedule is very important. Right? Another thing to put out there. I don't trade Asia session. I don't trade London session. Why? Me personally, think of trading like a game. You have the first quarter, the second quarter, and the third quarter of the game. If you play in the first quarter of the game and you play in the second quarter of the game, are you going to be tired and you might not play the third quarter? Absolutely. And when I'm talking about the quarters of the game, I'm not saying you personally. Think of the quarters of the game like if how the market moves that are going to happen. Think of those like the players. If the market moved during Asia session and it moved during London session, do you think price is also going to move during New York, or do you think price is going to consolidate? Right? If price doesn't move during Asia and it doesn't move during London, what do we know? Price is going to move during the New York session. You get what I'm getting at? If price moves for Asia and it doesn't move in London, what do you think is going to happen in NYC? Price is going to move. Right? And all the tools that we have as well with the ADR and the STP, all of that also makes life so much easier. But it's using that analogy of the different quarters, I hope that made sense. Right, now, coming back to that, why I brought that into an example, I've done a lot of back testing. I've also been trading for a very long time. A lot of my losses from the beginning of time, and again, if we need E to clarify, because he was one, again, he was my mentor, he was the one that I learned from, he was the one, whenever I had a problem, I went to him, right? Can ask E. All the losses that I've ever taken, and the most bullshit losses, always happen during Asia session and London session. So I've made it a thing to myself for my rules for the last 5 years, 6 years, I am not trading Asia session at all. Now, over the last maybe 2 years, I've started playing around during the Asia session. So now I trade it a little bit. I will say out of the 46 trades that I've taken this year, maybe 10 of them, 12 of them were during Asia session. So is there times where you want to trade Asia session? For sure, 100%. London session, same thing, for sure, 100%. But 70% of the time, 80% of the time, I am not trading it. I'm not even really looking to take trades, right? I update my charts during this time. I wake up during the NYC session. If there's something left for that session, I take a trade. If there's nothing left for that session, cool. Go on for the next one. We'll do the isolation session at night again, and we'll wake up the next day and repeat the same cycle, right? I think I also want to say this too, and I know I said I didn't want to yap today, but fuck, there's so many little details that you have to understand, not even about trading itself, but as yourself as a person. Why am I so strict with my schedule? Imagine if you had no schedule with trading. This is a 24-hour market. You're putting yourself in a situation where when are you going to be off the charts? When are you going to be on the charts? How long are you going to be on the charts for? I got into trading and I fell in love with trading because I fell in love with the fact that I was able to live my life every single day doing whatever the fuck it is that I wanted to without somebody in my ear all day. Where are you? What are you doing? You gotta get into work at this time. You did this incorrectly. I don't want a boss. I want to be my own boss. And I've always been that way. Very thankful for that. But when I came into the realization as I got older, right? Because when you're younger, you say that, but you say that because it's cool. And it's like, yeah, you see, you know that it could be a possibility, but you don't understand really the reasons why until you get older and you get your first job. That's what happened with me. I'm like, oh shit, this is real life. I fucking worked for a month and I quit. And I made shit happen. I hustled. I did what I had to do. Whether it was at this time I was still in college. I was still competing, right? So I was still traveling. I was still fucking doing everything when it comes to that, streaming, the content, and I was editing. Everything was my own, right? I quit that job. I had what, $3,000 saved. My rent was 200. My car payment's 400, and my insurance was like 200, 220. Cool. Not gonna go work for a boss. I got money saved up. I gotta do these things for school. I gotta do this shit while I'm competing. I gotta make sure that I have everything good when it comes to to my my traveling stuff. Days off or days where I wouldn't be doing nothing, I still had to go do Uber, go do Lyft, go do DoorDash, go do. At that time, what was that one app called that they took out? Not Postmates. Postmates? I think it was Postmates. No, there is an app. I don't remember what the name of it was. It was like a delivery one that I think Uber bought out or something like that. And that's just what it is, right? You gotta go work. You gotta go do it. You gotta go chase to be able to provide for yourself. So trading allowed me to have more of an open schedule, do what I want, more of a security. Grubhub was another one. I never did Grubhub because it wasn't a thing here in Florida. At least not in Orlando when I first was here. Um, but there was another one. If I'm not mistaken, I think it was Postmates. Right, because this was the one that's now. Was like that red logo one. You got Uber Eats now, or you got Instacart, but Instacart's the one for like groceries. You have Postmates is the red one, no? I don't know, bro. I'm so disconnected from all of that now. The ones I know for sure, Uber and Lyft. But like the other delivery ones, I have no. I've been years that I haven't used a service like that. So I forgot where I was going at with that whole story. Not gonna lie to you. I'm already I off tracked a little bit too much. Anyway, long story short, market structure is king, bro. I completely forgot what I was going at with that. Um, oh yeah, the details. Let me think. My bad. I hate when I forget shit. I gotta like retrace real quick. The details on the charts. I don't know. I I I I got off topic way too much there. We sidetracked way too hard. That's crazy work. Let me go back, retrace my steps. What were we talking about? We are talking about um price AU. Why I'm not looking at it. Moving counter trend. It makes trading more simple for me. Yada yada yada. I do a lot of talking, but it's gonna be hard to retrace all the way back. Fuck. Anyway, so daily we know we're still in an uptrend. 4 hour we have 2 weeks of rise, right? We're still in an uptrend. 30-minute time frame. It was the one pair starting, and go to more pairs as you can. Okay, yeah, yeah. So that was another thing I talked about, right? Looking at one pair, right? Looking at each pair, and then being able to, at the end of the day, once you update your charts, you know what to look for. Once you know what to look for in the morning, once you start trading, you already know, okay, cool, out of these 16 pairs, I only need to look at 2 pairs. Thank you for that. That was a good retracement. Then I said something else after that. I don't know where I was going with it. That's the whole problem. Fuck. Um, it's all good. You're hungry? No, I am hungry. I'm fucking starving. Yeah, and I said that earlier, and it's already we're still in the first pair. So yeah, I said I was gonna do this quick. Yeah, right. Once I'm in it, I'm in it. I'll finish whenever. But I am hungry. So the most important thing to take away from that is again, trading is going to simplify once you're able to see everything. But everything is piece by piece. Once you learn one thing, go on to the next. So that's one thing I wanted to add yesterday that I didn't say on the stream. Um, that was something I thought about that I was like, I'll just talk about it tomorrow, which is trading is gonna it and this goes into the conversation with Mikey yesterday because he asked a question. I don't remember the question, but he asked something, and is this a lot of information to learn? Yes, but because it's a lot of information to learn, at the end of the day, there is no set number as to how long is it going to take me to learn, right? Because learning is not something universal for everybody. The period of time that it takes you to learn something is not universal. Meaning, if this took me 2 months to learn, just because it took me 2 months to learn doesn't mean that it's going to take you 2 months to learn. Right? Something that I learned in 2 months, you could learn it in 1 month, in 3 weeks. Right? How fast you pick up on things. Something that took me 2 years, it could take you 6 months, 8 months, 9 months, a year and a half. It took me 3 years. Oh, but how'd you finish so fast if it took me this long? It took me this long to take it. How'd you finish so quick? Right? So I don't want to put a number on when you're gonna learn things and how fast it's gonna take. There is no number. But what I will say is it's a lot of information. Right? And again, it's super easy. Just ask yourself, all right, what are the rules for the gaps? Do you know if I tell you right now to list up every single rule that we have ever said in the streams, would you be able to reiterate them word for word, every single rule? Right? And if the answer is no, then again, that's okay. That just means you still have work to do. Right? You say, nope, exactly. I have not learned anything because I haven't applied myself. Right? You said applying yourself. Right. So, and again, that's okay. That just means you have work to do. And it's a lot more simple to learn one thing, understand that one thing, then go on to the next. Then understand that thing and really understand it, and then go to the next. And then start applying all the rules individually as you go. Right? So notice how the first thing, the most simple thing, one of the first things we talk about when we do the sessions, specifically the one-on-one sessions, right, is the market maker's pattern on the daily time frame, right, and the ADR. And the ADR is really the easiest thing because we're already used to that, right? As humans, the first thing we learn, one of the first things we learn in school outside of speaking is math, right? So the easiest thing is like, okay, cool. All I need to do to find STP or to look at the ADR, all I need to do is grab this number and subtract it by 33%, right? That's the easiest thing to learn for everybody because everybody's used to learning mathematical equations, right? Instead of learning what a gap is and the definition of a gap and what it means, right? And when it can move and when it doesn't move, and what happens when price doesn't do this to it or when it does this to it. Does it mean anything, right? That's a lot of information for something that you're taking in for the first time. So it's a lot easier to just learn things one by one, piece by piece. And again, stop worrying about how long it's going to take for you to learn it. And just focus on the end goal, which is, okay, I'm learning this for this. It's the same way, again, we've already done it. We have the human behavior for it. And how many years did we go to school for? And the only reason we continue to go to school is because we had something at the end of it, which is you go to you're fucking walking with your degree and your family member, you take pictures, you're looking forward to that. So think of trading the same way. The end goal is you treating yourself to a fucking 6-month long vacation because you just made a fucking $75,000 trade in less than 2 hours. See what I'm saying? Like, that's the end goal. If that's your end goal, if that's what you want from trading and that's the lifestyle you want, the same way that you wanted the lifestyle to go get a diploma, right? It's the same thing. Just have it thinking the same way. Stop thinking of the right now. Like, imagine if you went to college and all you were thinking about was like, oh my god, I gotta get this test and my homework and this and that, and every day you were stressing about it. You would have never finished. The same thing with trading. If you just cram everything in one piece and you're super lost and you have no clue what's going, you're gonna get lost. Right? It's the reason why you don't learn algebra 1, algebra 2, and then fucking go to whatever comes after that all in one year. It takes you one full school year to go to pre-algebra, then algebra 1, then algebra 2, then trigonometry. Right? For some people, they do whatever other thing. Right? They don't teach you as a freshman how to do algebra 1, 2, and trigonometry all in the same place. They teach you it 1 year this, 1 year that. You get what I'm saying? Like, I hope these analogies make sense. Holy shit, it's been 30 minutes already. I hope these analogies make sense. And a reason I give a lot of analogies is because it resonates with people a lot more. It's like, oh shit, that makes sense. Because if I'm just yapping and not giving analogies, it's like it's going in one ear and out the other, and you guys just want to be like, this guy has to stop talking. So again, not every pair's. I'm not gonna take 30 minutes for each pair like I did yesterday. I swear to God. But AUD USD, it just has powers or something. I don't know. Every single day, AU is just like, here, give them everything. Just talk to me. Like, all right. All right, so we good to go. Good to go in the chat. Any questions about what I said? Anything you guys want to add on to that? Give everybody 30 seconds. We just 7:33. 30 seconds here. 15 seconds. 30 seconds is a long time. We don't have a delay on the stream, so. All good. Just got in the crib so I can lock in now. Alright, bet. Welcome back home, sir. Welcome back. Yo, my legs hurt. And my arms hurt too. And it's getting cold out. My god. What a great time to be sore, huh? Alright, so let's keep it pushing, guys. Again, we're gonna go through every single pair that has the red flag next to their name. We're gonna speed it up so we can finish here. Again, I said yesterday I didn't want these sessions to be as long as like more than an hour because I know people watch the recording, before the live trading sessions or even before they go into work. So I want to make sure that you guys have enough content to where everything we say is valuable, but also I want to make sure that it's not too long so you guys have the time to be able to watch the recording, take notes, even the people in the live session. Again, a lot of these sessions, realistically speaking, yes, is the isolation session, right? Tonight's isolation session or the isolation sessions in general are for the next day's trading session. However, in trading, this information repeats every single day. So realistically speaking, you should be rewatching these sessions, especially the sessions where we actually go over little details like we did yesterday, like we did today. We've done it in a whole bunch of sessions. Some other sessions, again, like I usually do, I just fly through them. I update what I gotta update, and if you guys have questions, we'll go over it. If not, it's just a little bit of detail, right? Giving you guys, I'm not gonna say the bare minimum, but giving you guys enough information to at least be able to piggyback what it is that I'm looking for, right? And those sessions sometimes are also really good to rewatch anyway, because you might miss something or I might have said something at that moment that is good to know. So, AUD again, we know we're still in an uptrend, moving counter trend. We already know I don't trade counter trends, so I let price do what it has to do. As soon as price gives us a set lower high on the daily time frame, that's when I'll start looking to take those trades. Um, Using your class, Oscar is doing your opti. Yeah, that's fire. He's doing it tonight. Um, Looking at price and talking about what it was that we were looking at yesterday, right, and why we were given examples for AUD USD. And yesterday we were talking about market structure, right? So not only were we talking about market structure, but we were talking about also entry rules. So there's a lot to unpack here, and I'm going to try to get through it quick, again, because I don't want to spend another 30 minutes on this pair. When we're looking at the overall structure itself, what was price doing? Right, and I'll change the color so it could all be color coordinated. So the structure is going to be the green dots, right, or the green circles, right? So this is the structure that price is trading in. Higher high, higher low, higher high, right? The move to the downside is price moving from a higher high into a higher low. So the internal movements were giving us lower low, lower high, lower low. This is where a lot of traders get trapped. They don't see the internal move versus the external move. A lot of traders didn't see this as higher high, higher low, higher high, and price pushing down here, giving you a higher low. A lot of traders were looking at this as, oh, this is where the trend has shifted from higher high, higher low to lower low and lower high. And once you start adding the rules, oh, but look, we're lower low, lower high. We're bouncing off the 50 EMA. This has to be the good trade. This has to be the trade. The double top at the top side. A double top means double top is an affirmation, which means downtrend. We have the break of structure. After the break of structure, we have the retest. Right? Oh, we had the retest. We had exhaustion candles. We have the bounce off the 50 EMA. This has to be the trade. Price has to go down and continue a downtrend to make another lower low. And what happened? Price gave you the fattest fucking inducement candle you have ever seen in your life. And if you didn't cash out and you stayed in this trade thinking that price was going to continue to go down, in less than 30 minutes, price pushed all the way back up and hit your stop loss. The market makers went bye-bye, give me that cash, they induced the fuck out of you, and went straight to your stop loss. So understanding market structure, understanding that even though this looks good and you might think that this looks good, understanding that you're still trading in an uptrend, higher high, higher low, higher high, higher low, you know that price is going to go back up. This is a low probability trade to take. And this is what a lot of traders don't talk about. All they talk about is their entry strategy, and that's cool, right? Your entry strategy is okay because we understand that your entry is going to show up on the charts, if not every single day, every other day. But what's the difference? I've only taken one loss this year. Everybody else takes losses every single day or every other day, or in simpler words, they have one good week and then the next week is bad and then the next week is good and then the other week is good, but then the next 4 weeks are bad, right? I don't have to deal with that because above entry strategies, I understand market structure. And it doesn't matter what strategy it is that you're trading. It doesn't matter what it is. It doesn't matter if it's engulfing candles. It doesn't matter if it's EMAs. It doesn't matter if it's VWAP. It doesn't matter if it's patterns like the flag post patterns. It doesn't matter if it's harmonic patterns. It doesn't matter if it's the patterns like the flag post patterns, bullish or bearish. It doesn't matter if you're trading fair value gaps, order blocks, turtle soup. It doesn't matter if you're trading breakout retests. It doesn't matter if you're trading Fibonacci retracements. At the end of the day, those are all entry strategies. And there is thousands of entry strategies in the market. And all of them work. All of the entry strategies in the market work. That's the beauty of trading. Every entry strategy works depending on what type of style of trading you're doing. Right? If a scalper is teaching you strategies on how to be a scalper, there's going to be some rules that, yeah, you could use to day trade, but 99% of the rules are meant to be scalping. So you're going to lose trades if you're using a scalper's rule to scalp. The same thing if you're a swing trader. The rules that you have for a swing trader, you can't use scalping rules to swing trade. And vice versa. And same thing if you just day trade, if you're an intraday trader. It's all the same thing. So that's another thing about trading that a lot of people don't talk about, because a lot of people just don't see it that way. They really do see it as a skill-based casino, and it's yes and no. Because at the end of the day, you either know the rules or you don't. If you don't know the rules, you're gonna lose. And if you know the rules, there's a 99% chance that you're going to win. And again, that 1% doesn't have nothing to do with anything else other than the fact that we're human, we make errors, we make mistakes. And it all depends on what type of person you are. If you could control your emotions and you could control your mistakes and you already know what it is and what it isn't, then you're going to be okay. But if you're the type of person that loves to be hit and it is what it is, it's going to be a little bit harder for you to retain anything above a 70% win rate. That's the biggest difference between a lot of traders. So again, to go circle back to the beginning, the end of the day, every entry strategy in the market works. It all deals with market structure. Because again, if you're taking, and I'll use my examples and my rules for this. Internally, you have lower low, lower high. You're bouncing off the 50 EMA. We're in level 3. In level 3, we want to see price bounce off the 50 EMA. Boom. The entry strategy for the 50 EMA and market structure on the internal time frame looks good. So in an alternate universe, in a universe where I don't understand the 30-minute structure, I would have taken this trade. If I don't know anything about market structure and all I learned today in Jumper's stream, all I learned was the bounces of the EMAs, so that's what I'm going to do. I'm going to take this trade off the 50 EMA, right? Without understanding market structure, you're not going to know why you took this trade or why you took the loss on this trade. But because you know market structure and because you know that you're trading in a higher high, higher low, higher high, higher low situation, you know that this is a low probability trade. So now as a human, you have to ask yourself, okay, this is a low probability trade. Am I going to take this trade and say, fuck it, and wait to see what happens? Or as a human, am I going to make the choice to say, you know what? This is a low probability trade. I'm going to wait for the next setup for it to set up better. Once we have lower lows and lower highs and the change of character and the break of structure on the 30-minute time frame, that's when I'm going to start looking for this exact same entry setup, but when market structure starts downtrending. That's the biggest difference with traders who have a 90%, 95% win rate compared to the traders who have a 60%, 70%, even 80% win rate. Is the ability to be able to know and be able to stay out of trades when they know and they understand why their entry is a low probability entry. That is the biggest difference. So again, we just did fucking AUD USD for 40 minutes. I'm hungry. I'm gonna crash out. We're going to finish this quick today, team. So again, I hope that made sense. Please, again, even though I want to finish the session, I beg for you guys to ask questions if you have them, please. Don't let me finish this session and you guys are just fucking confused out of your socks. Let me know if you have questions. So AU, we know we're not trading it. We're going to go on to the next one. AUD CAD, we are in A1. We're in the first zone of consolidation. Price is moving sideways. Previously, price gave us an inducement of the low. It didn't give us a break. Came back up, right? Every time price goes to the bottom of the zone of consolidation, we go back up. Go to the bottom, go back up. Go to the bottom. What do I think price is going to do? Continue the bottom? No. Price is going to go back up to the top side. We know that this is a pair that's on a downtrend. We're in A1. We're in the first zone of consolidation on a downtrend. So these moves to the top side, counter trend. I don't trade counter trend, so I don't really have to worry about AUD CAD. However, I'm going to keep myself aware as to where price is at. Why? Because now we are stuck in another zone of consolidation on the 4-hour time frame. And why is this good? And why is this important? If price goes to the top of the zone of consolidation the same way that it did here last week, right? If price comes back up and gives us another inducement of the high, we know that we could take those trades going short back to the bottom of the zone of consolidation. If price gives us a valid break of these highs, then perfect. We know that price is just going to continue the uptrend back to the top of the zone of consolidation, and we'll let price do what it has to do. Once we start downtrending, that's when I'm going to start taking the trades. Right, we missed this yesterday, but there's a 4-hour engulfing candle. Right, and this is just another point of interest to understand, okay, cool, if price gives us another inducement of the high, and it gives us that inducement while in this engulfing candle, we know that we could take these trades going back down to the bottom. Alright, so this is just another point of interest. We're getting our charts ready for the future. Right? It's not that I'm the market maker. It's not like the market maker gave me a call and it was like, yo, look for this point of interest. And again, why is this a low probability point of interest? Because we're still on an uptrend. I'm not going to wait for price to come up to my point of interest and I'm taking the trade right away. No. I'm going to let price go to my point of interest. Price is then going to show me what it wants to do. If price continues to trend to the top side, why am I in a short position? But if price goes into my point of interest, right? It goes into my point of interest and we start seeing a change of character, break of structure to the downside, we know we could take the trades. But if price goes to my point of interest and all we see is price giving us higher highs and higher lows, why am I in a trade? And that's another huge difference between what I trade and how I trade compared to these other people online. Price is going to reach their point of interest and they're in a trade right away. You just took a price trended to the top side to reach your point of interest and you got into a trade right away. Instead of waiting for price to get into your point of interest, then showing you that price is going to start making lower lows and lower highs, and that's when you get into the trade. When they move, we move. It's not the opposite. It's not, they're moving. They reached the point of interest, now I'm getting in. going the opposite way. The train is going fucking north, and all of a sudden it's gonna go south in one move. Doesn't work that way, right? For the train to go from north to south, we gotta start taking turns. We gotta start turning right, or sharp left. We gotta start taking turns, right? Once we make that sharp move, and now that fucking train is straight, and now we're going south. Okay, cool. Now the train is south. The same way with trading. If price is giving you higher highs and higher lows, and you're looking for short positions, what do you have to wait for? You have to wait for lower lows and lower highs to develop. Once it starts making lower lows and lower highs, that's when you get into the trade. Again, when they move, we move. Yeah, I'm talking so much that my throat is starting to hurt now. And I gotta drink more water. Oh, now that I drank water, I feel my hunger so much more. Man, I really don't know what I want to eat though. I might just go to Chipotle, call it a night. But I don't want Chipotle at this time, bro. That's a lot of food. And Taco Bell, I don't want Taco Bell at this time either. That's bad food at this time. I could go to Wawa and just get a sub, but I don't want to go to Wawa. I might not even eat tonight, bro. Fuck it. Nah, I gotta eat, man. What do I do, man? I hate having to think about what I'm gonna eat. I wish I could just come home to fucking food just made. That'll just be so much more simple. Alright, so let me go back to where I was. A CAD, we're still on an uptrend. We have that 4 hour engulfing. 30-minute time frame, we had an inducement of the low. It didn't give us a break, right? So I'm gonna mark this all as just one move, right? I'm not gonna mark this as lower low, lower low, higher high on the 30-minute time frame. This is all just part of one move. And then we have a day of rise. So perfect. We'll let price do what it gotta do. Maybe you'll come back from your trip with a wife. Euro AUD. Not even gonna respond to that. Euro AUD, we are in level 3 on an uptrend. Once price gave us the break of structure of the zone of consolidation and gave us a higher high, we know that we're trading between these lows down here and these highs. After the higher high is made, we're just looking for a higher low for price to then continue to push to the top side. Price, right? The market makers made this a little bit easier for us, right? We understand that there's only two things the market could do. There's only two market conditions. Either when price is trending or when price is consolidating, right? So instead of just giving us a simple higher high, higher high, and then again, the trend would have been for price to make lower lows and lower highs and lower lows and lower highs until price gives us a higher low, right? Because in order for price to go from a higher high to a higher low, price has to be in a downtrend, right? Price has to downtrend. In order for price to go from a higher high to a higher low, it has to downtrend, right? And the market, instead of giving us a simple downtrend, it gave us a zone of consolidation, and that's okay. Again, there's two different market conditions. There's only two things the market could do: trend or consolidate. This time around, the market decided to consolidate. So perfect, right? Once we understand we're in a zone of consolidation, cool. Price gave us a higher high. We're looking for a higher low. Is price just going to consolidate and then give us a push to the top side? Or is price going to consolidate, give us a break of the zone of consolidation, continue the downtrend to give us a higher low, potentially somewhere in this area, and I'm looking at this area because of this gap that we have on the 30-minute time frame, to then start going back up to the top side? So only two things that could happen. Along the way down, obviously this gap is my last point of interest when it comes to the technicals and everything else. Before the gap, we have the 800 EMA. Before the gap, we have the 4 hour low. Again, there are different points of interest on the charts. Just because price is at the low of the consolidation, it's at my first point of interest to continue to look for price to go up. Does that mean that I'm currently in these trades? No. Why? Because, okay, same thing we just explained with the other pairs. Just because price is in my point of interest, I am not looking to get into a trade right away. Because price is reaching my point of interest, making lower lows and lower highs. So I am not going to be looking to take any trades on Euro AUD going long until we start seeing higher highs and higher lows. Once we see that the market direction has shifted from a downtrend to an uptrend, that's when I'm going to start looking to take trades. When they move, we move. Meaning, when market starts making lower lows and lower highs, that's when I'm going to start looking to take my trades. Not the other way around. I'm not gonna wait for the market to come to my point of interest to then take a trade. Doesn't work that way. Once it comes to my point of interest, as soon as we start seeing price turn around and start shifting in the trend, that's when I'll start looking to take a trade. So AUD USD, AUD CAD, Euro AUD, three pairs I already know from the list. I'm not really interested in. Not gonna really be trading them. Euro CAD, peak high territory and previous peak high territory. This is another trade. My rules, I don't trade peak high territory. So I already know EuroCAD is not a trade that I'm going to be looking for. I'm not even going to be looking to take a trade on EuroCAD. On the 30-minute time frame, we're still making lower lows, lower high. Once price gave us the lower low, again, there's only two things the market could do. Either give you a simple lower low, lower high, lower low, lower high to continue the downtrend, or price is going to consolidate, move sideways. There's only two things the market could do, either trend or consolidate. In this case, price is consolidating. Above the fact that we're in peak high territory, price is consolidating. I'm not looking to take a trade because price is in a zone of consolidation and I'm looking for a breakout. Once we get a breakout, that's when I'll start looking to take a trade. So I already have two reasons on EuroCAD to not even look at this pair. Go on to the next one. Now we're on the daily time frame on Euro USD. Euro USD, we are in level 2 on an uptrend, right? We had push number 1, first zone of consolidation. We had the break of structure, higher high, higher low, the retest. Price came up, gave us a higher high. Perfect. After the higher high was set, what did price do? Consolidate. Perfect. We have no continuations on the daily time frame, on the 4-hour time frame. Going to the 4-hour time frame. We're trading higher high, higher low, higher high. Price gave us a higher low. At the higher low, we're on the 800 EMA. Perfect. Okay, cool. We have 2 weeks of rise. Okay, cool. This could be a continuation for this week to continue to look for price to push to the top side. No problem. Let's go to the 30-minute. 30-minute time frame. We're trading higher high, higher low, higher high. Internally, price was giving us lower low, lower high, lower low, lower high, lower low. Now again, if we go to the 5-minute time frame, that's going to be the structure on the 5-minute time frame. Lower low, lower high, right? Lower low, lower high, right? Price gave us a little inducement up here. Didn't give us a break. Same thing, lower low, lower high. Lower low, lower high. Right, so that's the number one thing that we did speak about this yesterday. We were looking at this on the 1 hour time, on the 1-minute time frame as well. This is where we went down into the 1 hour, or sorry, the 1 minute, right? And in the 1 minute structure, when price on the 5-minute gave us a lower low, after price gives you a lower low, what does price need to do? It needs to give you a lower high point. It needs to uptrend. And on the 1 minute time frame, that's what we saw. On the 1 minute time frame, yes, we got the change of character. Yes, we got the break of structure. And again, this is where simple as that. Yep. I want to reiterate this. and I want to say this to specifically Kendo, right? Is it a bad trade to take a trade in these areas? No, it's not. Because again, if you want to trade the pullbacks, you could trade the pullbacks, but understand that when you're trading pullbacks, you can't look at STP, you can't look at the ADR. It's all about market structure. All about market structure, right? With that being said, you could also, you could also obviously add the fib to make it a little bit easier, right? Let's add that to the chart. If you would have taken any trade from these lows going to the 50%, 61.8, that's cool. Price, where did it gave inducements, crazy inducements at 3 in the morning. So, maybe you got stopped out even before this bigger move up here, right? And again, this is, and I don't even want to even talk about, I'm not, you know what? Yeah, I'm not even gonna talk about that, those internal moves and the entries and how to do the pull. That's just gonna be, that's gonna confuse everybody, right? So let's not even do that. At the end of the day, this is why you lost the trade. It's just as simple as that. And we did go over this on the 5 minute time frame. I remember going over this on the 5 minute, and then I just didn't draw it out, and then that's when I switched over to the 1 minute, and I'm like, okay, this could be a pair that I'll be interested to continue to look at, you know, especially because we have that third week push to the top side, right? But the trend never shifted. We were still trading lower low, lower high, lower low, right? Luan says Taco Bell. Man, I don't think I want Taco Bell, my brother. I'm gonna be honest. I don't think I want Taco Bell, man. Chipotle. I said Chipotle earlier, bro, but I don't think I want that heavy food. Nah, I might go Chipotle, bro. Nah, I'm not getting fucking Sonic. You're bugging. Nah, bro, you saw what that Sonic did to me. I have a pimple now on my face, so I don't like eating shit like that. Like milkshakes and soda, bro. I want to stay pretty, man. He said, nah, no mames, whatever, bro. So again, any questions about this? Again, let me know. Again, Kendall specifically too, my brother. Um, Again, there's ways to trade pullbacks, especially when you're fully aware that you're trading a pullback. There is ways to trade it. There's just so much smaller the attention to detail that you need to be able to pinpoint at the right time at the exact same moment. That again for me is not worth the stress, right? So again, I keep my trading simple, right? Yes, I'm looking for price to go up, but price is not going to continue to push to the top side if price doesn't trend, if it doesn't shift the trends from a downtrend up to an uptrend, right? That's it. So for me, it's very, I keep it as simple as that. I don't care about trading the internal moves. I don't care about trading, the 5 pip moves. I don't care about that. I'm looking for STP, right? Euro USD is a pair that moves 35 pips. STP 35 pips. That's you 35 pips. I scratched my ass with 35 pips, right? So on a pair that only moves STP 35 on a pullback, you're only gonna get 10 pips, 15 pips. I don't care about 10 pips. I don't care about 15 pips. I'll catch the 35 pips. Once this shit starts trending, I'll catch the 35 pips. On GJ, I'll catch the 126 pips. We could do that. And that's the reason, again, on a bigger scale of thing, the end goal That's the reason why I'm chill with not being able to trade for 2 months, 3 months, 4 months. Because the trades that I've already been taking this entire year is hundreds and hundreds of pips, ranging from the smallest pair AUD USD to the biggest pair on our list, which is gold, right? Or US 30. Like, people dream to catch 100 pips. We see it all the time, especially on gold and US 30. Like, how many of these traders are on gold catching 2 pips, entering a trade and exiting after 2 seconds? Look, guys, just caught 2 pips on gold. Yes, you also have a $40 million account that you could open a $400 lot size to. Yes, you're also a prop firm owner that could open a $300 lot size on gold and catch 2 pips. Like, I wish I could do that too. Anybody can make money like that, but that's just not the reality of things. It's simple. 5 minute was clearly downtrending, so yeah, exactly. I wasn't really too focused on the lower time frame. Once we had the 1 minute change and break, I was on the 30 and waiting on price to retest the 200 EMA. Got you. Yeah, I see what you're saying. You all you did was just look at the change and the break, right? You saw that price was above, and you were just waiting for the retest of the 200, right? On the 30 minute, again, this is another example of what we were talking about on AUD USD about entry rules, right? It's again like on a zoomed out on a zoomed out view of the chart, Euro USD looks perfect, right? Euro USD did exactly what we wanted to see, right? Daily, we're not on the 200, but we knew we were in uptrend, right? On the 4 hour, we had the 50 above the 200, right? We're not bouncing off the 200, but we were still on an uptrend. We have 2 weeks of rise going into a third week, right? We have a higher high, higher low. We're at a higher low point, right? Once the higher low point was made, we have an internal change of character, break of structure on the 1 minute, right? We have the EMAs. We have the bounce off the 200 EMA. The 50 is still above the 200, right? Still indicating that we're in an uptrend. So again, I fully understand where the mistake happened. Like 100%, I understand what you were waiting for. But that one little small detail, right? That one little small detail, which was market structure, we're still on a downtrend. So again, it all boils down to what I said earlier in the stream, right? If the moment the moment you slip, which is human error, which is going to happen, and it's okay, but understand that again, you made the mistake once, so you're gonna do it again. A lot of traders are going to make the same mistake over and over and over and over again, and that's just what it is. Oh, what is a pip? A pip is the candlesticks is how the volume in the market, how much they move. So the pips just make it easier, just the number amount. So for example, GBPAUD, it moves 118 pips. That's how much volume is going to come into the market, is 118 pips on average every single day on the markets. All right, so again, the only other pair that has another one that we had examples was for gold. So we're gonna get through these pairs here. We'll be done in the next 10-15 minutes, guys. So GA, we're also in peak high territory. This is a pair that I'm not going to be trading. Peak high territory. I don't trade in peak high. We're still lower low, lower high. We still have 2 weeks of rise. I don't care about none of that. Price is still making lower lows and lower highs. Perfect. We're still in peak high territory. Peak high territory. I am not going to be trading. So we're going to skip this one and just go on to the next one. So we already know this is another pair. Out of the 16 pairs on our list, this is one that we're not going to be looking at either. 5 minutes still downtrending. Would have been different if we had a 5 minute inducement of the low or something. Yep, exactly. If we would have had a 5 minute inducement of the low, and then we had the 1 minute change of character, break of structure, you know you could take that trade back to the top side. Right? Because again, the question overall is the same thing that we were saying yesterday. It's like, okay, yes, we had a higher low point, but realistically speaking, the question is how low could the higher low be? How much lower could this higher low get? and we're seeing it now, it could be lower. And again, it was just waiting for that shift. Like, yeah, the 5 minute was still downtrending. The 1 minute was just the fake out trades, right? That's where the 1 minute traders would get faked out. Where it's like, yes, you're trading in a 30-minute higher low, but internally you're still making lower lows and lower highs. Now, if those internal lows on the 5 minute were to be making higher highs and higher lows, or it would have given you an inducement, then you go into the 1 minute and start looking for that change of character break of structure entry to continue, right? Because you go from the daily to the 4 hour, the 4 hour to the 30, the 30 to the 5, and the 5 to the 1, right? You don't go from the daily to the 30 to the 4 hour to the 5 to the 1 minute to the 30 minute, right? You go from the daily, from the 4 to the 30 to the 5 to the 1, right? So if the 5 minute is still uptrending, you know that the 1 minute is still not ready to look for those trades to go back up. But if the 5 minute is uptrending, you know that, or it gave you the inducement, you know you could go to the 1 minute and then start looking for the trades, start looking for the entries. Um, we talk about GCAD. No, GCAD, we are in level 3 on an uptrend. Price gave us higher high, higher low, higher high, higher low, higher high, higher low. In the higher low now, we're looking for our entry confirmations to continue to look for price to go up. On the 4 hour time frame, again, this is where we see that structure. We're trading between this higher high and these higher lows. Price gave us a higher low and decided to just give us a zone of consolidation, which is okay. 30-minute time frame, we're also trading between a huge area where price is just moving sideways. It gave us a lower low change of character, move sideways, and that's all it's been doing. Zones of consolidation, I don't trade them unless we get an inducement of the low to go back up, or until price gives us a break of structure of the top side to continue the push back to the top. That 1 minute change BOS is just forming the 5 minute lower high point. But if we get a 5 minute inducement, it would have been different. Yep, exactly. So GCAT is another pair that I am not going to be trading. GJ, we are in an uptrend, level 3, peak high territory again. We finally reached the previous daily highs that we were looking for, right? To continue the higher high, higher low, it gave us a zone of consolidation instead. It gave us the break, it gave us a retest to continue back in to make another higher high point. So GJ is doing exactly what it needs to do, right? Again, at this point, GJ, I'm really only going to be I'm going to start looking for the short positions on GJ. And again, what I'm looking for is a change of character and break of structure down to the bottom side. So we'll be patient with GJ. We have higher high, higher low, then price gave us higher high, higher. I don't want to say that this is higher high, higher low, higher high, but since we are at the daily and the 4 hour highs, I want to keep it a little bit more tight than usual so we could start looking for some entries on GJ. Price gave us a higher high, we're looking for a higher low. And GJ, very similar to how I look at US 30 and gold and oil. These are pairs that I do trade counter trend because they have such a big ADR, right? So I know that a pullback is going to be anywhere between 40 to 60 pips. And then the real move is going to be anywhere between, right, 60, 70, 80 pips. In this case, STP is 100, right? So the other pairs, again, trading counter trend wouldn't make sense. There's not enough pips in the game, right? It's just, for me, it's not worth it. Um, Going oil and 30 on my list for 372. GJ, we also have 3 days of rise. After 3 days of rise, the market must move sideways or go down. So we already know that today is a day to keep an eye on GJ. And we had a 15-minute engulfing candle. We had the retest, went straight down. So that might have been the entry for GJ already for the day. GJ has been a pair that, as of recently, has been moving a lot during Asia. So we'll see. I usually don't get to trade GJ because of that. GU, we're in a huge zone, 30-minute zone of consolidation. We're still in the same area, right? Price gave us a retest, right? This was another pair also, very like what we talked about with AU and gold, that we talked about a little point of interest to look for a trade. But if you got into this trade as soon as price went into the engulfing candle, straight to stop loss. We have another day of drop. We're still trading between the same 30-minute high and 30-minute low. Price gave us that third week high with that candle already, so I'm going to delete that. Daily time frame. Right, we are in level 2 on an uptrend, very similar to EU. Price gave us a higher high, and all we're looking for is a higher low to be set. Right, once the higher low is set, that's when I'll start looking to take these trades back to the top side. NZD USD. Man, I am so hungry. NZD USD, we are in level 3 on a downtrend. Technically speaking, we're still in the second zone of consolidation because price still hasn't given us the break of structure of the lows. So we are still in the second zone of consolidation on a downtrend. We already had 3 months of drop on the third month, which was last month. It gave us a drop no net. Could we expect price to give us a 4th month low? Again, it could happen, but very low probability because we're at the bottom of the zone of consolidation. So we just want to be very careful with that. We have 2 weeks of rise, this week being the third week. Price already gave us that third week push to the top side. And then on the 30-minute time frame, price gave us higher high, higher low, higher high. You know, I don't want to say that this is higher high, higher low, higher high because price here is just pretty much moving sideways. But it is still giving us technically higher high, higher high, higher high. So I am going to mark it just because of that. I'm going to respect those rules. Even though I don't agree with it, we're gonna respect it. That's just what life is, man. Sometimes you're not gonna agree with everything and everybody, but sometimes you just gotta pull your pants up and be like, you know what, I'll respect your rules. It is what it is. Right? So because we know the rules of that, we're gonna respect them and we're just gonna keep the structure. Genius, oh my god, here we go. US 30 on the daily time frame. Yo, Drew, I'm hungry, man. Are you gonna make me something? Did you get my mac and cheese from yesterday or not? You're a horrible roommate, man. US 30, we're in peak high territory. Pips were promised to you 3,000 years ago. Yo, maybe, bro. Yo, as fucking smart as I am with this shit, yo, you might be right. Mac and cheese is ready when Call of Duty is loaded up. Man, yo, you know I'm getting food after this, right? You gotta give me like after, and I'm almost done. I'll be done in the next like 5 minutes, 10 minutes. Nah, like 5 minutes. This is pretty much the last pair. I have to go get food real quick. Oscar is torturing me right now. He might tweet about you too, bro. Be careful with that. Nah, I gotta get food now, bro. There's no way. Got the break looking for the flag post pattern. Alright, so let's take a look. So US 30, we're in peak high territory. We're still making higher highs, higher lows. On the 4-hour time frame, we have 2 weeks of rise. This week being that third week push to the top side. Yo, why do these people keep calling me? Give me a second. Um, 4-hour time frame. What did the 4-hour time frame do? Higher high, higher high, lower low, change of character. Okay, cool. Right, we had a little change of character. It's not a trend shift, right? It's just a change. This could just be an inducement to continue the push to the top side. We have 2 weeks of rise. Perfect. This week, could we be looking for a third week push? We could be. Technically speaking, that third week push has already been made. Right, with this candle here that printed in on Monday, it went up, tapped the third week's high here, it gave us a wick, tapped into it. So technically that third week push has already been given. After that candle, we have a 4-hour exhaustion candle already here that also gives us another slight indication that price might still be on a downtrend, right? That price doesn't want to continue that push to the top side. On the 30-minute time frame, we have a change of character, lower low, lower high. For today, it gave us that break of structure down to the bottom. We have The 50 below the 200. We know we're looking for price to bounce off the 50 EMA. Let's add the BOS here on the 30-minute. We know we're trading between this 30-minute high and these 30-minute lows over here. I'm gonna mark up this entire zone. It's a pretty big zone, but US 30 is a big pair. Now again, there's two things too I'll mention about US 30. Do I like the position that we're in? Yes and no. Right, US 30 these last couple of weeks, and it's more of a psychological game that US 30 has with me right now, just based on how price is moving and how price has been moving. Right, where we look at the last 2 weeks and it doesn't matter what you're trading, you're getting faked out. You're looking at all the candles, how they've been printing. It doesn't matter what time you enter or exit the trade. Like, you're getting faked out. Some crazy candle is going to print that's going to hit your stop loss, and then price is going to go into your direction. For the last 2-3 weeks, it's been that way forever. Right? Like, again, 2-3 weeks, probably a month or two. That's all price has been doing. Now, again, could you trade those areas when that happens? Absolutely, we did it, right? That last trade, November 10th. Absolutely, you could do it. But again, it gets very technical there, and you have to be present on the chart once that happens. So, again, there's nothing wrong with that. This is why I trade the NYC session, because if the move wasn't given in Asia and it wasn't given in London, it's gonna give it to me in the NYC session, and you just gotta wait for it. So, not a bad pair to keep an eye on. Though also another reason why I like US 30 is the 800 EMA. Usually when price is this close to the 800 EMA, price is going to go towards the 800. Now, this is another area and another question you have to ask yourself. Once you enter this trade or before you enter the trade, which is, all right, I have STP and I have ADR, but if STP is below the 800 EMA, somewhere in this area, which it is, right? Let's calculate STP real quick and we'll have the exact same number, the exact number. 523 minus 33%, 350 pips, right? So just for conversation's sake, let's say that we got to pull back somewhere in this area, right? And we do 350 pips. Am I going to be looking to take profit at 350 pips, or am I going to be looking to take profit towards the 800 EMA? I'm going to be looking to take profit around the 800 EMA, because I know that price respects the 800 EMA. So I just want to be aware of that. Again, I'm also aware that we're in peak high territory. Like I said earlier with GJ, I treat US 30, GJ, and gold and Bitcoin and US oil a little bit differently. I do trade peak highs and peak lows on these pairs because they're bigger pairs. But I also run the risk trading in peak high, right? Let's talk about US 30 specifically. Looking for this trade in peak high, there is a bigger risk because my stop losses are not going to be 5 pips. 5 pips on US 30 is 50 pips. It's a bigger loss. And that's the reason I try to wait until everything is, if I'm trading peak highs or if I'm trading zones of consolidations or if I'm trading pullbacks, I need to make sure that everything is picture perfect. From the daily time frame down to the 1 minute. If there's one thing that doesn't make sense, I'm letting it go. I don't care if I have a change. I don't care if I have a break. I don't care if the engulfing candle is there. I don't even give a fuck if Jesus comes down and tells me take the trade. If there is something that's slightly off, I am not going to take the trade. So just be aware of that. So again, these last couple pairs, guys, that's it. I'm fucking speed running this shit because I'm hungry. And I'm not trading USD CAD anyway. We have a day of no net where price is just moving sideways. Um, USD's, and we're not, it doesn't matter. It doesn't matter where we're at with USD CAD. I'm not trading it. USDs are, we have a day of no net. Gold, we have a day of rise. We're still in a huge zone of consolidation on the 30-minute time frame. This is another pair we gave an example from yesterday, and I don't want to fucking go into crazy detail, but it's the same thing. Same thing that we talked about with AUD USD, same thing that we talked about with the other pair. If you took this trade on the internal time frame thinking that price was just giving you lower low, lower high, lower low, lower high, lower low, right? You took the trade on the lower high thinking that price was going to continue down into the lower low. You got stopped out. Why? Because price market structure is king. Higher high, higher low, higher high. You're still on an uptrend. Price is in a zone of consolidation. This is a low probability trade. It doesn't matter that the EMAs are crossing. It doesn't matter that you have a 372. It doesn't matter that whatever. It doesn't matter that the gods came down and told you to take the trade. If you do not follow market structure, you're going to lose the trade. On to the next one, Bitcoin. Again, it's the same examples, man. I'm not trading Bitcoin, and I'm not going to update it this week. Um, I'll wait till Sunday session to do this. We have a change of character. We had the break of structure. We had the retest, and price gave us that push to the top side. We also had an engulfing candle here. This was a beautiful, beautiful trade. Well, beautiful looking pair, not trade, but beautiful pair. We had lower low, lower high, lower low, higher high, change of character, higher low, higher high, break of structure, higher low. At the higher low, we moved sideways. The 50 crossed above the 200, and then boom, that's when price exploded. Everybody, all the EMAs are bunched up together. When the EMAs are bunched up together, that's when price is gonna move into a singular, into a direction in very fast pace. But again, you'll go on Instagram and you'll go on Twitter, and everybody's talking about, oh, I can't believe this happened with Bitcoin, blah 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 blah. I could believe it. We've been talking about it for how long in this area? Now the question is, oh, if you knew, why didn't you take the trade? I respect my rules. Not only do I respect my rules, I respect politicians, man. You know how many meetings there were this week? So many. I'm good. I'll let politicians do what they gotta do, man. Once the news for Bitcoin or once the news for crypto starts dying down a little bit, I'll start day trading it again. But till then, I don't care how good my rules. I'll say this. It's a little bit of It's more for my ego too. You know what I mean? Like being able to forward test my rules during these times. It was the first time that we're trading crypto whenever we have a lot of news, right? So this is my forward testing when it comes to crypto. This is how I forward test, and we talked about this yesterday, which this is why this conversation is important now. And then once I finish this with this, we'll be done for the night. This is my first time trading crypto during these crazy news events. And I told you guys, it's very important to back test. It's very important to forward test. It's very important to study, take notes, rewatch the sessions, right? How is it? A lot of people would be asking, well, oh, how do you forward test? Exactly what you see on my charts on Bitcoin. This is how I forward test. I stop updating my charts every day, and I let price move. I let price do what it has to do. And in due time, price is going to show me, okay, is this working? Is this not working? Can I do this with this pair? Can I do that? Right now, this is picture perfect. We have a change of character. We had the break of structure. We have the retest. Lower time frame, we had the change. We had the break of structure. We had the retest. Lower time frame, we had the crossings of the EMAs. Right? On the higher time frame, the 30-minute, we had the EMAs all bunched up together. Price usually explodes when the EMAs are bunched up together. Perfect. Now I know that I could use all my rules with crypto. I could use all my rules that I normally use on BTC. I'm okay. This is how I forward test. So now that I know, right? We also had a 372. Yeah, I haven't even marked that, but you're right. We had 1 day a rise, 2 days a rise. Beautiful 370. This was a fucking A+ setup. That now that you said we had a 372, I'm pissed that I missed it. And this would have been the trade, because let's test it right now. So 9:30, we were awake at this point. Let's see if there was anything here that we would have been able to take. An easy trade. Let's see if there was any engulfing candles. Right, almost gave us a 15-minute, but it did not give us a 15-minute engulfing. On the 5-minute, we had nothing on the 5-minute. Right, no engulfing on the 5-minute. On the 1-minute, and I'm also going to be looking for structure on the 1-minute, where we had low, lower, high, lower, low, higher, high, higher, low, higher, high, higher, low, low, lower, high, lower, low, lower, high, lower, low, lower, high, higher, high, higher, low, higher, high, higher, low, 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 low. Boom, change of character happened here. Alright, so that would have happened late. Um, so no engulfings on the 1-minute. I didn't take it because you said you were chilling off it. We had a 1-minute change BOS bounce off to 50. Yeah, that's really the only thing. The 1-minute, right? 1-minute would have been a little bit more technical, but really on the 30 or on the 5-minute, right? It's where I would have been a little bit more to take the trade. Right, I would have loved to have seen too. If I'm trading this in real time, I'm looking to see, okay, do we have a break of structure of the zone of consolidation here on the 5-minute, which is again the Asia session range, right? Asia London session range. But I'm looking at structure on the 5-minute. That's where the candlesticks are printing and moving, right? And did we have a break? I'll be looking at these highs here, which is the highs of the 800 EMA, where we tested, went down, tested, went down, tested, it went down. And this is exactly what we had to break, right? The break happened at 8:30 in the morning. Boom, price came down, gave us a retest. Once price gave us the retest, right? We didn't have any engulfing candles. We didn't have anything. I would have probably have waited for price to just given us another higher high point, higher low retest on the 5-minute time frame. This is probably where I would have gotten into a trade. More than likely, I would have said take the trade here, have our stop loss below the area. Maybe the stop loss would have been on the 1-minute time frame. Let's take a look real quick. Right, so I'd be like, I don't really like that stop loss. It's too wide. Let's see if we could tighten it up a little bit. And no, we wouldn't have been able to tighten. If we put it below the structure, I would have said put it here instead of down here. But when we're looking at structure, the safest place to have placed that stop loss would have been below here. So it would have been a position like this. We take it to trade right on the 1-minute. We had that bounce off the 50 EMA. So let's say we took a trade here. This is the stop loss. Stop loss is at 63 pips. Again, Bitcoin is a very big pair, so it's going to be a little bit expensive. My TP for the day would have been the 372, that third day high. So I would have had that stop loss down there. My TP would have been at these highs up here. It would have been a cool little 1 to 2. Nothing crazy. Now, it was straight green candles. I definitely would have had STP on my screen. Right, so I probably would have waited for price to move a little bit, right? My first red candle. The first red candle, we didn't have it until the top of the 30-minute zone. Right, but let's look at STP. 348 minus 33% is 233. So 233 pips for the day would have been my STP. My STP was below the 372. Oh, I looked at that wrong. Hold on. Two what? 233. Yeah, no, I'm bugging. 233. Okay. STP would have been below 372, so I would have just targeted the 372. Right? So perfect. I know 100% sure this trade would have just been a 1 to 2 this morning. So Bitcoin moved perfectly. That was a beautiful trade. But again, this is what forward testing looks. That's why I'm okay with missing this trade. I'm okay with price doing what it has to do. Same thing we've been talking about for the last 2 weeks on BTC. I'm letting price do what it has to do. Right? There's too much news. There's too much things going on that we're just not aware of. Right? When I'm looking at my structure, this looks perfect. Right? It reached the 800 EMA. Price respected the 800 EMA. It gave us a higher low, and we're looking for price to go from higher low back up into a higher high. Cool. If price continues to trend to the top side, we have so many other areas to take a trade. We're looking for price to bounce off the 50 EMA. If price breaks these highs and we start trending above the 50 and price starts bouncing off the 50, we know we could take those trades to the top side. Right? So it's all about being patient, right? Knowing what's happening now and then getting ready for the future. So that's pretty much it for tonight's session, guys. Any questions, let me know. Any other pairs you guys want me to go over, let me know. If not, that'll be it for tonight and we'll be back tomorrow. Oscar is crashing out on people in this chat. It's funny as hell. Yo, that's what he does all day. Yo, his Twitter is hilarious. So I could only imagine how his Discord is. But he's a funny dude, bro. Then the news for tomorrow too. We have USD news at 8:30 in the morning, CAD news at 9:45, and then FOMC at 2 p.m. So tomorrow might not even be a good day to even trade. Might not even wake up. And again, with news days, we know that especially on days where we have high impact news at 2 p.m., there's a 99% chance that the market might not even move up until 2 p.m. So we'll wake up, we'll look at the charts in the morning. If we see something, we'll take it. If not, we know that we'll just have to wait till that news release hits for us to start looking to take trades. So hope you guys have a good rest of your night. We'll see you guys tomorrow morning. Peace out.